Good afternoon to you all.
Good afternoon, sir.
Good afternoon,
Right.
sir.
Okay. Yeah, as you all know, this is a new subject for you to follow here. It's accounting and finance for managers. I think you have good, clear awareness about the course content. Yeah, Kumudini and Sellakumar. I think you have clear idea about the content and the
Yes, sir.
yes aim and objectives of the course unit. So, however, I already shared important points here. So, if you uh, go through this handout, I think now you can see my PowerPoint well. Am I correct?
Yes, sir.
Right.
Yes.
Yeah. Then here, if I move to the yeah, actually, very first day today, then we have to discuss about the content and how to evaluate it and what are the objectives of this kind of course units actually uh, in order to include into your syllabus, right? So there are a lot of important matters to discuss today. So here, first of all, you can see this aims of this course units, right? The aim of this course units on accounting and finance for manager is to equip managers with essential accounting and financial knowledge, enabling them to make effective financial decisions, analyze financial data or financial information, and contribute to the financial health of their organization. So, in order to manage financial health of that particular organization, so it is important to have your accounting and finance knowledge, right? Without having, even if you run your own business, right? If you run your own business, you should have awareness about the accounting process, financial statements, and how to finance for a business and how to use your uh, financial assets in order to maximize their profit and also the return, right? Then there are a lot of important matters in how to invest their capital assets in different opportunities. There are a lot of important decisions behind this accounting and finance, right? It is not only for accountant or the financial analyst, right? So in general public, so you all should know accounting and finance basics, right? Then as a management and administrator of health sector, it is not only the physical and mental health, you have to think about the financial health as well, right? That's why include this kind of course units into your syllabus, right? I think you got my point clearly, right? If you have any doubt, then you can ask, right? So you can disturb anyway you can disturb me and ask your questions, right? You have that freedom. Only thing here, I expect your active participation for this kind of discussion because this subject somewhat new for you, but very much important and very practical subject. Therefore, in our personal life as well as professional life, we have to use this accounting and finance knowledge in order to make different kind of uh, uh, effective decisions, right? So what we are expecting from this kind of course units, actually after completing this kind of course units, you should be able to understand fundamental accounting and finance concept relevant to managerial roles, and also to analyze and interpret financial statements to assess the organizational performance, right? So if you think about, yes, we can see different stakeholders in a business, right? Different stakeholders. If you think about very famous public hospital or the private hospital, right? Then public mean public listed companies also there. If you search public listed companies which are involving with health and health care sector, representing healthcare sector, there are a number of public limited companies, right? Then these kind of public limited company owned by general public, that means shareholders, right? Shareholders. Then shareholders, there may be number of shareholders. It may be uh, uh, 10 to 20 or 100 or 1000 or more than that, right? So most of them are, yeah, most of the shares are selling in the stock market, right? Those are called public listed company, right? Public listed companies then actually listed in the Colombo Stock Exchange in our country. So if you think about other countries, there are number of stock markets, right? Hong Kong, then the New York, then the uh, uh, then Delhi as well. So then different types of stock markets in the world, right? Then then all the organizations, most of the public limited, they are collecting funds through the uh, stock market, right? To the uh, through the stock markets and secondary market as well, as also there. So secondary, under the secondary market, then most of the capital investors, so investors share their uh, 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 their that mean uh, shares among different persons, right? Then that is under the under different kind of stock market. Here in this case, actually, if you are going to invest your money or financial assets in different types of shares, right? So there are a number of important matters, right? So then for example, now if you are going to invest in Sri Lanka or the Colombo Stock Exchange, right? You are having 1 million rupees, right? After uh, 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 that mean your services. So after 20-30 year of services, you have saved around 10 million or something, right? Then your main objective is to invest your money in different sources, right? So what are the sources you can invest your money? What are the sources? Yes, tell me. What are the sources you can invest your money? Yes, mutual funds. Yeah. What else? Gold. Yeah, good. Very good. What else? Yeah. Sorry? Yeah, yeah, land and
Buy
property,
land,
right? Real land. Yeah. Yeah, real assets. Yeah. What's it?
stock
Yeah.
market,
Yeah, stock market. Stock market, right? Then, so otherwise, very simple investment here. Investment mean deposit in on FDs, right? Treasury bills, treasury bonds. So there are different sources, right? If you want to invest your money, then you can see that kind of thing. In other words, right? If you want to find required capital, right? Required capital to start to commence your business. So what are the sources? What are the sources? Now you want to establish large scale business, a large scale hospital or the uh, uh, business, hospital or the health care sectors business, right? So then how to uh, uh, raise your funds or to obtain your funds? So what are the sources? What are the sources? Yeah, yeah, bank loan. Yeah, correct. Yeah, what else? Bank loan. So otherwise, you can use your own savings, right? Your own funds or bank loans. So you can issue debentures, right? Again, you can, yeah,
Physical assets.
yeah, you can again you can invest your physical assets, your vehicles or building to the business. Good, good. What else? Yeah, then another main task is to, yeah, you can issue debentures, and or you can that mean you can share, you can sell your shares or the shares of your business within the stock market. So that is called IPO, right? So then you can sell your shares on the market, right? Then you can earn your funds. That is called financing sources, the sources of finance. Sources of finance. So as the financial manager, not the accountant, right? As a financial manager, we should know how to acquire funds and how to invest them into the business, right? It may, yeah, we can invest into our own business, or otherwise if we have excess funds, we can go for other investment. Then not only that, now previously I got one example. If we have 10 million of savings, right? So how to invest? So most of the investors, they are not willing to invest your own, that mean your all funds in a same business, right? In the same business. What is the reason behind that? So there may be a high risk, right? High risk. Then most of the investors, they are concerned about the risk conditions as well, right? Risk conditions. In order to that mean mitigate or minimize the risk, right? Mitigate or minimize the risk. Then most of the investors, they are diversify their businesses and investment among different industry and different companies, right? They are investing in different organizations, right? That is called investment portfolio. Investment portfolio, Ayojana Kalamba, right? Investment portfolio. Instead of single investment, we are investing in different sectors, different companies. Then ultimately we can earn return, and also we can manage the risk, right? That part also important. So if you think about the investment, again, different types of investors here, right? Some are short-term investor. Normally we use the term speculators, right? So I think you know that. This is then within the first day of our discussion. It is important to know this kind of new terms or the terminology in accounting and finance, right? Then after after aware in those things, so this course will be very easy, and it is easy to understand the content of this particular course units, right? This is very, again, as I mentioned at the beginning, is very useful. This is a very useful course units, but we need to know specific terms and the practice. Then those are important, right? So later on I will explain in detail. Then again I want to mention, then there are two types of investors, right? Actually there are different categorization. Mainly we can say first, yes, main categorization is individual investors and the institutional investors. Individual investors and institutional investors. Who are the individual investors? Who are the individual investors? Yeah, doctors, I expect your participation for this discussion, right? Yeah, individual person who are willing to invest in different organization, right? They are having funds, financial assets to invest in different assets, right? Then the institutional investors mean, then we have different institutions, right? They are earning profit, and they have reserves, Then by utilizing their excess capital, then they are going to invest in the stock market or different other sources, right? Other assets or the opportunities, right? Those are called institutional investors. Further, we can categorize, another categorization is then the domestic investors and the domestic investors and the foreign investors, right? Foreign investors also there, right? Due to foreign investment, then we can see higher or the market capitalization in the stock market, right? With that participation, we can see higher return as well, right? Then there are a number of factors. So here I want to mention actually, then if you are going to invest your own funds, so you need to know about the accounting, financial statement. So now, if, for example, if I use some name of the company, I think that is not a big problem for us, right? Ethically, we cannot use some name of the organization, but this is only for teaching purpose, right? So if you want to invest your funds in a bank like Sampath Bank or the commercial bank, right? So or otherwise DFCC or otherwise other manufacturing or the food and beverage company, right? Or the hotel industry. Or these days we are talking about that mean John Keel's Holding, right? Then there are number of organization in the country. So in order to now, if you are willing to invest your funds on that particular organization, so how to decide it? How to decide it? Now can we go to that particular organization and we can see whether they are operating well, or their product and services quality process. We cannot physically do anything, no. So we can make some decision by using their published information websites, and also annual reports published by different listed companies. So based on that, we should be able to make decisions whether I should invest this particular organization or not, right? Otherwise, physically or by using internal information, we cannot make anything, right, about the organization. In order to assess the organization, we have different types of sources. The main sources are financial statement, annual report, sustainability reports. Then they are producing different type of reports to present their existing uh, uh, performance, right? It may be financial performance or the financial performance or the operational performance or the market performance, right? Then in order to determine them, so actually we should be able to understand financial statement, right? And the content of the financial statement. So line item, important line item in a financial statement. So we should have clear idea, right? Even we have a million or billion dollars or the rupees, right? Billion number of rupees or the dollars. So without having good knowledge in accounting of and finance, so it is difficult to invest uh, uh, in good that means proper manner, right? So sometimes you have no clear idea in accounting or finance, you can hire financial accountant or the accountant, management accountant, or the financial analyst, right? Then you can run the business. As you know, right, as you all know, then these days we're talking about different types of financial frauds, financial that mean misuse, right? Then here then we cannot believe, and we 100% we can believe our accountants or the financial analyst, right? Or the that kind of officials. We can believe them, that we should believe, but 100% we cannot give that reliability on that particular that mean other persons, right? Therefore we should have as an owner or the manager or the, so then we should have some idea about the accounting and financial process, accounting and financial statement, and financial performance, how to measure the performance of that particular organization. It may be financial performance or the some kind of cost information, cost and management report. You should be able to read them, understand and interpret, and again you should be able to make a constructive decision based on the financial statement and the financial information, accounting information. So there are huge task under the accounting and finance in different types of decision. Therefore, even you are at the health sector, or it may be Ayurveda or the Siddha or the it may be with Western or any other Unani, anyone, right? So then here you have to have clear idea about accounting and finance. That is the essential of anybody, not only the health sector, any other sector, students or the then researchers and other persons in different industry or professionals in different industry. Even they are not directly linked with accounting, directly relevant accounting and finance, but indirectly they should know accounting and finance. Otherwise, then you have to depend on the recruited accountant or financial analyst, right? That is not so good. But if you read financial statement, audited financial statement, so you have to have some idea. Otherwise, you cannot make better decision, right? Therefore, here actually I wanted to highlight why we need to learn accounting and finance as uh, health professionals. Right? You all are health professionals, and here, as per your degree program, you are considering management and administration of Ayurveda institutions. Now that is the overall idea, right? Then you are going to manage Ayurveda institution. So, right? So then after completing your degree, you should be able to run any type of hospital or it may be private, public, Ayurveda, Western, anyone, right? Then pharmaceutical organizations. There are a number of pharmaceutical organizations, pharmaceutical business. Then the health also become a business today, right? Not only in our country, if we think about the world, so we can see that kind of thing, right? Therefore, then you should have clear idea about the accounting and finance. Therefore, you should be able to analyze and interpret financial statement to assess the organizational performance. That's the point I elaborate here. The next one, apply financial tools for budgeting, cost analysis, and decision making. So you know that then budgeting, it is important. Now without having budget, so we cannot compare our actual, right? In order to compare the success of the business with the plan, right? You know that most of the organization, they are producing 5 years or 10 years corporate plan or the strategic plan, then the action plan for years or the quarters, right? So then uh, with that plan, so you can compare your actual performance with the budgeted performance. Then we can identify the variation, or that is called variances. That is called variance analysis, right? So we can identify the variances, and again we have to think about the reasons for or causes for variances, right? What are the causes for variances, right? So again we have to critically evaluate them and identify reasons for that kind of variation. If it is adverse variance or the favorable variance, so we have to think about it, right? Again, in order to make decision, those are very much essential, right? Here, that part also important as a health professionals. Evaluate investment opportunities using capital budgeting decision or technique. Actually, yeah, if you are running a business, you may have excess
Excuse me, sir.
capacity. Yeah, do you have anything to clarify?
Yeah,
Yeah, tell me.
slides are not moving, sir.
No, not moving. I am talking about the first slide, right? Is it okay, first slide? Yeah.
No, sir. First slide is introduction. No, it
Yeah, learning
indicates all.
outcome. Learning outcome.
No, sir.
You can see.
No, sir, topic here.
Now is it okay? Can you see now?
Yes, sir.
Right. Right. Now I'm talking about the learning objectives, right? Learning objectives. Now evaluate the investment opportunities using capital. Now this is a fourth bullet, right? Then here you can see, yeah, fourth one, right? Evaluate investment opportunities using capital budgeting technique, right? That is also important if you have excess funds, right? So next task is to expand your business. In order to expand your business, so you have to acquire some kind of capital assets or machines, or otherwise you have to build additional places or buildings, right? Then plants, right? So you have to acquire some vehicles, right? Those are yeah. Then you have to start some new products, or if you want to install large scale that mean solar system. So those are long term financial investment, right? Long term investment. So in order to evaluate them, so you should have again accounting and finance knowledge, right? Financial knowledge. So you should be able to actually, after completing this session, you should be able to this uh, topic, that means this course unit, you should be able to evaluate them, right? Then evaluate tools and technique of financial decision making, manage working capital and cash flow effectively. So now that part also important. I think you have heard this about this concept of working capital, right? During the COVID period and during financial crisis, right? Crisis period, financial crisis period. So yeah, you have heard about the working capital requirement, right? Working capital requirement. Working capital requirement, right? So what is that working capital? Yeah, actually, in order to run a business, so day to day, you have to have some that means current assets, then current assets, or the short term assets, right? So otherwise, we cannot run the business. For example, then if you think about very simple business, right? Now you are conducting a very small communication center, right? So yeah, normally we take some acquire some businesses to uh, 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 businesses for uh, uh, that mean providing photocopies, scanning, right? So then there are a number of business. Now, if you think about the photocopy machine, even you have purchased very good and that is called quality photocopy machine without having photocopy sheets and other facilities like electricity and labor facilities and other supportive materials. So you cannot start the process, that means production process, so that particular services, right? So in order to conduct those, that means operate the business, so you have to have some kind of minimum assets, current assets, right? Those are called working capital, right? That is the requirement for operating the business. In order to operate the business, we should have minimum short term assets. Those are called working capital. So in order to manage them, we should have good knowledge about the accounting and finance, right? So some are saying, so now I have money to settle our creditors. Anyway, I can settle, right? That means the liquidity, right? That part also important, right? Then under the working capital management, we have to think about the liquidity of the business, right? Liquidity means then how we settle, or what is the ability, right? Ability to settle creditors, short term and long term creditors, mainly the short term creditors. Under the liquidity, we are talking about the short term ability to settle some creditors, short term creditors, right? If it is very high, then it's a good situation. But we have to have some trade-off between profitability and the liquidity, right? Profitability means that is the ability to earn profit, right? Then the liquidity means ability to pay for our commitment, or the creditors or suppliers, right? Then these two are very much important, right? So if we have higher amount of money and short term cash and short term assets, right, than the required that means than the requirement, so it again we can see some idle money, then that is also not good conditions, right? That idle money mean we have additional funds, so the money those can be invested in different assets. Again, we can earn additional profit from that. Profit, it may be profit or interest, or we can earn additional return from it, right? But if we are having higher, if we are maintaining higher liquidity, it is also not so good. That is the additional investment in current assets. That is not so good, right? Why we are saying that? Why we are saying that? Actually, at very first day we need to know everything, right? Now I am talking. It is not suitable to maintain higher liquidity than the required level. That is not. That is also not so. That is also not good for the business. Why we are saying that? Actually, we are funding. We are collecting funds from different sources, right? Different sources. It has a cost. It has a cost, right? Even if you use your own funds, right, for your business, right, again it also has an opportunity cost. Why we are saying that? Why we are saying that? If you are not starting your business, so you can uh, yes, we can save this amount or deposit your additional funds into the fixed deposit, or the treasury bill, treasury bonds, as you said, gold, or any assets, and you can earn profit, right? Due to this business investment, so you are sacrificing those kind of other opportunities. That is called opportunity cost, right? Then opportunity cost of capital, right? In order to run a business, we need to have a capital. Then in order to collect capital, we have to face for a cost of capital, right? Even if we invest our own funds, it also has a cost of capital. If you if you are investing your funds from funds from your bank loan, then you know that it has uh, a stated interest rate. It may be 15% interest or 20% interest rate. That is depend on your agreement with the bank, right? Then again, you are collecting funds to start your business through different sources. It may be your own funds, or it may be share, through the capital or the share issues, through the debentures. It also has a percentage of interest. Or if you are collecting funds from a bank, then again it has a percentage. It may be 10%, 20%, or 15%, like that, right? Then that means, if your funds is not free from the cost, it has a cost. Therefore, you should be able to earn profit through those funds. Otherwise, so your payment side may be higher than the profit, right? In order to maintain higher liquidity, so you will lose your profit. Therefore, you should have a trade-off or balance in between your profitability and the liquidity. So liquidity and the profitability. If you have having higher liquidity, sometimes you may have lower profitability. If you have a lower some kind of lower liquidity, you can see some kind of higher probability. But if you think about the very low level of working capital, right? Working capital and current asset, that is also maybe a reason for reducing your profitability. Why? So sometimes you cannot acquire some higher that mean favorable, you cannot obtain some goods from favorable under the favorable agreement, right? Due to your financial that means liquidity issue, right? Therefore, sometimes you can see higher discount rate for cash payment. But if your liquidity level is very low, then you cannot go for cash payment, right, for your suppliers. Then you have to take you have to buy some items or the units or material under the higher price. As a result of that, your production cost may be high, then selling price may be high. It is difficult to compete with the market. Then your sale will be less, right? Ultimately, profit also will be less. Therefore, this is a process. This is a process we need to know, right? Then here under the fourth bullet, we should be able to identify the long-term assets and how to invest in long-term assets. Deeply we can discuss later. Then evaluate tool and techniques. Then the managing, I told about the working capital requirement. So we have to maintain liquidity and working capital enough for the enough working capital. That means we should have a break-even level. Then comprehends the principles of risk and return and their impact on decision making. Another important point is the risk and return. We are not limited to the return, right? So we have to think about the risk as well. What is that risk? Risk in normally we define as variability of possible outcome. Risk is the variability of possible outcome. Then if our expected outcome is vary more than the average, that is called higher risk investment, right? But here, if you are having comparatively low deviation or fluctuation in that particular return, then we have less risk condition, right? So here we have again, you know that there are two types of investors actually. One category is called risk averse, AVRS, right? AVERS, risk averse, right? What is that risk averse? Doctors, who are the risk averse? Risk averse? You are under the risk averse category, or the risk another category is called risk lovers. Risk lovers. You know the lovers, no? Risk lovers. right? Risk mean avadhanam, right? Risk averse, avadhanam akamati parsha, right? Who are the representative from here? Risk averse, right? Actually, that is depend on our attitudes. Some are willing to face for the risk condition, high risk condition. Some are not willing to face for that kind of higher risk condition. They are always thinking about the minimum risk, right? Those are called risk averse. They are not like to acquire assets under the risk condition. Some are called risk lovers. They are always seeking about the risk. Then they are seeking risk and earn profit or return. Normally we believe that, right? Then then risk and return. So again we should have trade-off between them. Trade-off between them. Higher the risk, then higher the return, right? So normally if you think about, if you are starting a business, you can earn higher profit than your FD rates. FD rates. What is the reason behind that? FD rates mean you are having minimum research or minimum risk, low return, high risk, high return, right? Then less risk, less return. No risk, again, comparatively less return, right? No risk, no return, we cannot say like that, right? No return, no risk means lower return, right? Then the average risk means then average return, right? Then higher risk mean higher return, higher return. So that is also important for making decision. Later on we can discuss. We have separate topic for that, right? Another one, communicate accounting and financial information among organization or the decision makers, right? Then if I move to the brief introduction about the course units on accounting and finance for managers. This course units provide a comprehensive overview of accounting and financial principles tailored for managers. It now here as a manager, how we use accounting and finance principles, concept, and concept in different application and decision. It emphasizes practical application and critical thinking to enable managers to navigate financial challenges confidently, right? So through a combination of theoretical learning and hands-on exercises, participants will gain the necessary skill to excel in financial management with their respective organization. Now everyone easily understand with this description, yes, what we are going to do under the accounting and finance for managers course units, right? So if you go to the detailed course units, that means content of our detailed content of our course units. First one is introduction to accounting and finance for managers. So now today actually we have to follow this area, role of accounting and finance in managerial decision making, or role of financial statement analysis and significance, right? Then the second bullet here, key accounting concept, accounting elements, a double entry system, accounting equations. Then that is the second part of the discussion. Then the third part is financial statement analysis. As I mentioned earlier, then most of the organization they are publishing their financial statement through annual reports, so or through different web sources. Then we should be able to analyze those financial statements by using different types of financial statement analytical technique, like uh, uh, comparative financial statement, common size financial statement, especially the ratio analysis. So there are uh, number of analysis technique, right? Financial statement analysis technique. That is the third part. Then fourth bullet, cost and management decision making. then cost behavior and classification, break-even analysis, and contribution margin, then budgeting, variance analysis, as I mentioned earlier. Those are under this category, right? Then the next category, introduction to finance. Previously discussed introduction to account. Now, introduction to finance and capital structure decision. Key concept in finance, key functions in financial management, financing and capital structure, sources of long-term financing, capital structure decision and cost of capital. So then here we can see different types of items or elements under the financial finance and the capital structure. As I mentioned earlier, risk and return, understanding risk and its impact on decision making, portfolio diversification, risk management. What is that portfolio diversification? Portfolio diversification means, so as I mentioned earlier, so we can invest our funds in different sources, different assets, instead of investing your all amount of money in a single assets, or single assets, right? Then you can invest them in number of diversified assets. You can invest in then the in manufacturing company, another part from for banking company, another part for insurance, another part for hospital or the health sector company. So then you can diversify your investment portfolio, right? Then you can minimize your risk. Right? Then actually here, if you invest this this is called portfolio diversification and risk management, right? So if you invest in portfolio, right, actually you can minimize your risk, right? Minimize your risk. That part also important. Risk minimization or the mitigation of risk. In order to mitigate the risk, so you can. Then another important concept here, I think you know that very famous investor Warren Buffett, right? So he also mentioned in his books, right? Don't put all the eggs in the same bucket, right? That is the idea. Don't put all eggs in the same bucket. What is the idea, doctors? What I am saying here? Don't put all eggs on the in the same bucket. What is the idea behind that?
Invest different institutions.
Sorry.
Portfolio invest in different categories.
Yeah. That's correct. But what is the idea now? What is the threat or the risk behind that task? Yeah. Don't put all eggs in the same bucket. What is the idea behind that? Yeah. Micro level idea. Yeah.
If the investment is fail,
Sorry.
you can lose all the investment.
Yeah.
If the
Right.
business is going
That's
to
correct.
fail,
Right. Due to various reason, right? If due to a reason, if you have any threat or any effect to that particular bucket, so then destroy all eggs, right? Then if you deposit, so the invest or put your eggs, number of eggs in different buckets, even one or two buckets damage, so then others will remain. So that means in order to mitigate the risk, so you have to invest in different type of assets, right? So gold, you can invest some portion of your funds in gold, some portion from share market. When you are investing in share market, again You can invest in manufacturing organization, service oriented, for banking. Likewise, there are different then the state sector also there, right? Then you can plantation, then the hospital. Then we can invest in different organization, right? I think you got this idea clearly, right? Then actually this is easy to understand because this is linked with the practice, right? Practical situation, right? Day to day you have to face this kind of issues, and you have to make different types of decisions with this knowledge, right? Even you know that you don't know that theories and the situation, but you may handle this kind of, you may have this kind of particular experience, right? Then capital budgeting and investment analysis, traditional investment technique, right? So there are, in order to make long term investment, so we have different techniques. Yes, two types, or mainly we have two types of technique. One is called traditional investment technique, right? Then like payback period and accounting rate of return, those are traditional technique, right? Then other methods are called that is called discounted payback, the discounted cash flow technique. This guy like net present value, internal rate of return, profitability index. Later on we can discuss how to use them for making decision, right? We have separate subject, different lessons for that, right? But here under the under the content, we need to know those things, right? Yeah, actually with the limited time period, we have to cover those area, right? Those area. So in order to cover our syllabus, so I think you have aware about the resource person for this particular program. Here Professor Emeritus Professor Chitra Ranjani and myself got this responsibility. Then here you have a number of session topics here. First one is introduction to accounting and finance. Then as mentioned here, then I have to cover all those things. Then next one is also for me, introduction to accounting, double entry system, accounting concept, accounting equation, and so on. Then next one is the financial statement analysis. So how to analyze the financial statements. So you have to have clear idea about the way of reading financial statement. So after issuing the financial statement, today itself you can download some financial statement from for one or two banks. So free of charge you can download that. Then annual report for, you can type the name, then John Keys Holding, annual report of John Keys Holding, annual reports of DFCC, annual reports of Sampath Bank, right? Then likewise you can download annual reports, right? Then you should be able to read it, right? Actually at this level you cannot read it, but in future I am very much sure you will be able to read financial statement with the awareness of this kind of thing, right? Then cost concept, short term decision making, how to make short term decision, introduction to finance and capital structure decision. It will be covered by Professor Ranjani. And risk and return and working capital management and its important decision. Those will be covered by Professor Chitra Ranjani. And long-term capital investment. So and recap sessions will be covered by myself, right? So this is the overall structure of your lecture series. I think you have clear idea now. Actually, when you are teaching any type of course units, at the beginning we have to show the way of delivering our lectures and how to evaluate it, right? Then as you all know, 30% for the assignment, another 70% for the end semester examination, right? Then if I move to the first part, introduction to accounting and finance for managers, actually it consists of understanding the role of accounting and finance in managerial decision making, describe the importance of financial information in uh, guiding organizational strategies, explain the key component of financial statement and their interrelationship. So this yeah, then if you go to the financial statement analysis, now this is the description of this uh, eight course, eight sub that mean eight sessions, right? Topics, right? There is first one, second one, here, third one, cost and management decision. If under that, differentiate between various cost classification and their relevance to decision making. Next one, perform a break-even analysis to determine the level of sales needed to cover cost. Then apply budgeting and variance analysis techniques in monitor and control cost. Right, then capital budgeting and investment decision, as I mentioned earlier, we have to identify the process of long-term investment and decision making. This type investment appraisal technique, as I mentioned earlier, then traditional method and other different techniques and discounted cash flow technique. So everything here mentioned, that is under the capital budgeting and investment. Under the introduction to finance, key terms and function of financial management and capital structure decision. So again, under that, you can see identify different sources of long-term financing. I explained that sources of financial assets, right? Likewise, you can see determine the optimal capital structure based on financial and risk condition consideration. Working capital, under the working capital, here you can see analyze the cash management strategies to optimize liquidity and manage cash flows. Evaluate receivables and inventory management technique to enhance working capital efficiency. Forecast short-term financing needs and select appropriate financing options. Then under the risk and return and working capital management decision, so you have to cover this area, risk and in financial decision making. Then the portfolio management, how to manage the portfolio, and capital asset pricing model. So there are number of segments under the risk, return and working capital decision. Right, now actually we need to move to the accounting. Accounting, right? Now accounting and finance for managers, that is the main topic or the course when its name. Then today we are going to introduce our course units accounting and finance for managers, right? So then if you move to the first part, accounting. What is accounting? What is finance? Right? Why we need to learn about accounting, finance? Likewise, so we have to have a brief idea about the overall content in our course units. Right? Now, if I move to the first part, accounting, you know that that is called AAA, American Association Accounting Association, AAA, AAA, right? AAA, account of the American Accounting Association. Define accounting as the process of accounting is the process of identifying, measuring, communicating economic information to permit informed judgment and decisions by users of information, right? So in order to make the decisions by users of information here, that is the main task of accounting, right? Our main task is to provide information, right? Information to the relevant parties. Relevant parties, those are called stakeholders. A stakeholder. So users of information. So there are a number of users of accounting information. Who are the users of accounting information? Owners, managers, then the laborers, right? Well, the workers, then the government organizations, right? They are seeking our financial strength, right? Financial uh, strength of our business. Why they are searching it? So if you think about the owner, then they are willing to know about our business, whether we can see the improvement or the improvement or the growth or the stagnating level or the declining level. So we have to make that kind of decision. So in order to make that, right, it is uh, important to provide information to that particular parties, right? That is under the American Association Accounting Association's definitions for accounting, right? The process of identifying, now here same one, right? American Accounting Association, right? Then accounting is concerned with providing both financial and non-financial information that will help decision makers to make a good decision or the uh, better decision, or otherwise that is called a structured decision, right? Accounting is concerned with providing both financial and non-financial, right? It is not enough to yes provide financial, so then we have to show about the other non-financial, non-quantitative factors as well, right? Right. The accounting, you can see two key elements. First one, an information process that identifies, classifies, summarize the financial events. Sorry?
Beat.
Yeah. What is the idea? Yeah. Please mute your phone. Otherwise, disturb for others. Right. Can you pass this message, our doctors? Okay, thank you. A report system that communicate relevant financial information to interested interested parties. Now, another important point here, I want to know the interested parties or the users of financial statement, users or the interest parties of a business. Who are the interested parties in a business, right? If you think about particular organization, so who are the interested parties, right? If you are going to start public listed company, right, then who are the interested parties? So yeah, it is important to know the interested parties as well, right? Then if we think about interested parties, as I mentioned earlier, we can see the owners or the other workers, right? Then the uh, auditors, then the government organization like Inland Revenue Department or the central bank or any other organizations. Those are covered for this particular definition. Then again, you can see another descriptions relating to the accounting. Accounting is the vast and dynamic professions and is consistently adapting itself to a specific and verifying varying needs of its users. Over the past few decades, accountancy has branched out into different types of accounting to cater for the diversity of needs of its users, right? Further elaborate the accounting, financial accounting, right? Now previously accounting, now financial, specify the accounting, type of accounting. Financial accounting is the process of producing information for external user, usually in the form of financial statement. Financial statements reflect an entity's past performance and current positions based on a set of standards and guidelines known as generally accepted accounting principles, GAAP. GAAP refers to the standards framework of guidelines for financial accounting used in any given uh, situations. As mentioned here, you can see it is important to adhere or comply with the international financial reporting standards. That is, those are called IFRS. IFRS, right? Then again, definition related to the financial accounting is mainly concerned with according business transactions in the books of accounting, books of accounts for the purpose of presenting financial accounting accounts to management, owners, shareholders, tax authorities, prospective and future investment. Who are the prospective investors? Prospective investors and the future investors. What is that? Yes, those are the potential investors, prospectors, future investors, right? Financial institutions, right? So those are banks, financial institutions. They are willing to recover their loan through this business. Therefore, they are seeking financial statement. Then tax department, tax authority, always they also pay attention to acquire taxes. So taxes based on the income. The shareholders or the owners always willing to know about the success of their decision through the financial or non-financial performance. So those are the important categories for this our kind of that been accounted process. Then financial information supplied by financial accountant in the form of faculty, financial accounting in the form of financial statement related to the past actively, right? Here, then there are a number of descriptions I am not going to discuss in detail. Again, financial accounting is concerned with the identifying, recording, classifying, summarizing, and interpreting the business transactions which have already occurred in the monetary terms. Money being a common medium by which business activities are assessed and measured. Right, accounting involve two main elements as mentioned here, and information process summarize financial events. Next one is a reporting system that communicate financial information to the interested parties, right? Here now here in this point onward, here you have to think about the accounting process, bookkeeping, likewise, right? So I think it is better to take 10 minutes break, right? 10 to 15 minutes break, because this time is not so good. So you can make changes, right, in your body, and again come back after 15 minutes. Further we can work with some confidence, right? Is it okay? Is it okay, doctors?
Okay, sir.
Okay, sir.
Okay, sir.
Right. Just take the break and return on time, right? Okay, doctors, can you hear me well?
Yes,
Yes,
sir.
sir.
Yes, sir.
Can you see this PowerPoint?
Yes.
Right.
Yes.
Now I think all you came back to the discussion. Then we are in financial accounting. Now, basically, we discuss about the accounting. Accounting we can divide into different clusters or the categories: financial accounting, cost accounting, management accounting. Concept in financial accounting is the double entry system, double entry bookkeeping, right? Then actually it is started from 1494, right? I think you know that Italy and Venice, right? In 14th century, 1494, issued one books that is regarding the geometric algebra. So one chapter mainly allocated for financial accounting, double entry system and the bookkeeping, right? By Luca Fasciola, right? Luca Fascioli, normally we believe he's the father of accounting, right? Then we mainly focus on this kind of accounting system operating in Venice, right? As per that, here we have dual aspect of each transaction, right? Then one is yes, as a result of a transaction, then one that means one amount, similar amount, debit and credit into the different accounts, right? Then as a result of that, ultimately we can see similar or the equal balance for debit and credit, right? That is the simple concept behind that. So we'll discuss later. Then financial accounting also provide information to people outside the business, such as investors, regulators, analysts, economists, and government agencies like Inland Revenue Department and other central bank and other organizations, right? Then here we are providing information for the external parties, right? External stakeholders, right? Is actually these stakeholders or the interest parties we can divide into two. One is the internal stakeholder, another one is called external stakeholder. Stakeholder mean that means financial performance of the organization, right? If you think about a simple organization, a business like banking organization or the financial organization, manufacturing organization, then they are having number of government, then the creditors, debtors, like reporting transaction, recording transaction. Always we have to think about our own organization. So now, if you are working on behalf of Sampath Bank, so we are recording and reporting on behalf of Sampath Bank. So then we are at the Sampath Bank. So all other parties base, right? Here, if you think about any organization, right? Then who are the interested? That means internal interested parties and the external Generally, we can divide internal and external. Who are the internal? Internal mean when that means people who are interested about our businesses within the organization. Mainly the if you think about the public listed companies, management mean board of directors and the chairman. Then, those are called internal parties, and also employees in the business. Then they are also interested. They are also concerned as internal interested parties. Then internal interested parties mean, yeah. Then the board of directors or the management of that particular organization and the employees, all are internal interested parties, right? Then external interested parties mean investors, prospective investors, right? Regulatory bodies, analysts, economists, government agencies like central banks or the IRD, Inland Revenue Department, Tax Department, right? Then they are interested about our progress and financial progress in order to charge taxes, in order to make different decisions, right? Then those are called external parties. They are not involved in with the management of that particular organization, right? But they are getting some benefits, or they are getting some information. They are expecting information about the company, right? Those are external parties. Then you should have clear idea about the internal parties and important concept, right? Next time, just we are going to discuss that particular topic, and we are computing, and we are making some we are preparing some accounts and chart table, right? Then some computation also there, right? But today just we are going to explain and brief about the foundation for this discussion, right? For this course today. Then if you have any doubt, you can ask, right? Who are the internal parties and external parties of an organization for you?
Internal parties is employees, owners, board of directors, like things, and external invested parties.
You are talking about the owners,
Yeah.
right? That is depend on the business, right? If you think about, as I mentioned earlier, public listed company, to involved in with their management. Then I am not a interested. That means internal interested party. I am under the investor category, right? Carefully think about it, right? But management means board of management, board of management, or the board of directors and the chairman, including chairman. Under the internal parties, then you should careful with that. But if you think about the proprietorship or single owner business, right, that is called proprietorship or partnership, right? At that time, then most probably we can see owners involved with the business, right? They are under the internal parties because of they are under the management, internal management, right? Right? That's the reason for that. Therefore, saying owners of a proprietorship is under the internal parties, but owners invest money, but they are not involved with the business, right? They are work as the owner, right? That is under the, yeah, if you think about listed company, they are not involved with the business, right? They are not involved with the business decision in that particular organization. Right now, for example, Sampath Bank, right? So if I have 1,000 shares of that particular then I am at the outside the business, right? I am not under the category of internal party, internal user, internal interested party. Others are under the external parties, right? Except management and employees. Have you got my point?
Yes, sir.
If you want to highlight in Sinhala, then you can ask. It's clear, right? Is it clear?
Yes, sir.
Right. Then next one, another description relating to the financial accounting. Financial accounting focuses on tracking and government agencies, owners, and other interested groups. Right? Actually, financial accounting prepare for both internal and external parties, internal and external stakeholders, right? Including management, owners, investors, government organizations, and so on. Right? I think it is very easy to read it. Another important thing here under the accounting, financial accounting, I'm talking about financial accounting. What are the qualitative characteristics of financial accounting, right? These are the expected characteristics of financial. Expected by the financial accounting standards that can organization maintain the following qualities when submitting financial accounting information, right? So normally all organizations prepare financial statement, right? Normally this financial statement includes financial, then uh, uh, income statement, then the statement of financial position and cash flow statements and notes to the accounts. There are a number of items in a financial accounting statements, right? Then are called qualitative characteristics. Then our financial statement should consist with these characteristics. First one is relevance, right? Financial statement must be applicable to the decisions being made and presented in a way that always for distilling useful insights, right? Useful insight, right? Here actually these information, right, even we prepare lengthy financial statements, right, so ultimately it should relevant to make a decision. That's a simple idea, right? Then next one is the materiality, right? Then relevance, adala bava, right? It should be relevant. Relevant means adala bava, adala wenna one for the business decision making. Another one, materiality, right? Materiality. Then it should be a material. Material කියන්නේ ප්‍රමාණාත්මක වෙන්න, ප්‍රමාණවත් වෙන්න ඕනේ, ප්‍රමාණවත් වෙන්න ඕනේ. The information presented present must be of the quality that indicate consequences in strategic or legal decisions. As a separate item in our financial statement. So in order to prepare the financial statement, we need to decide whether it is under the material item or not. If it is material, you have to disclose within the item in the financial statement or appearance on the statement, right? Next one, reliability. All information must be free of error, right? Free of errors and reported with pinpoint accuracy, right? Accuracy should be here. It is very clear, reliable, and accuracy. Understandability. Is important as it be immediately reliable and without the possibility of misinterpreted, right? So then understandability should be there with this financial statement. Then comparability. Now another important thing, as I mentioned at the beginning, so among companies, right? In order to compare them, so we should have a comparability. If we prepare financial statement based on that mean standards, accounting standards, international financial reporting standards, or the accounting concept, then we see similar structure, similar way of calculating each and every item. Then only we can compare, right? Then only we can compare. That comparability should be there. Finally, all presented financial statements should align with the current best practices in accounting to ensure other organization, right? So if it is a comparability quality, so then up to this point we about the financial then the next one is the management accounting. Management account, I mainly focus accounting and financial accounting and management accounting. Accounting we can divide as accounting, financial accounting, management accounting. There are a number of other classification, public accounting or government accounting or something. Information primarily for internal use by company's management, right, or the firm's management. If we think about the firm is common. It may be a company or any other organization, profit oriented organization or not for the profit organization. You know that not profit oriented organization. You know that, I think profit oriented mean companies, those are established to earn profit, right? That is the main objective of that particular organization, is to earn profit. But in some organization, their main objective is not to earn profit, but they are trying to provide services or the any other particular services to the society. However, at the end, they may have excess or the excess or the deficit. So most of the organizations, then a sports club, some other organization, some association, health, then WHO is a large organization, but their expectation, their main objective is to provide services to the world. They are not try to earn profit, but there may be excess due to the support of developed countries. Then they may have large amount of money and then funds, right? And also the excess may be there. Excess may be there, right? But it is not saying profit. Their purpose is to serve to the world, right? If you think about our cricket board, right, then they are having some excess, right? But excess or deficit, but their main purpose is to serve to the development of the sport in that means cricket sport event in the country, right? Then those are called not for the profit organization, not for the profit organization. ලාභ අරමුණු කර නොගත් ව්‍යාපාර සංවිධාන. ලාභ අරමුණු කර නොගත් ව්‍යාපාර සංවිධාන. So some are saying then profit oriented organization, right? Their main purpose is to earn profit, right? Most of our companies in that country, right, listed companies, those are then United Nations, right? So then those are associations. Their expectation is to, the main objective is not to earn profit, right? So here, however, if you think about the management accounting, right, management accounting produces information primarily for internal users by the company or the firm's management, right? Firm management, the information is generally more detailed than the product produced for external use. Right? Then here, main task, right? Those are under the we are providing information for internal parties. That is the main task under the management accounting. I think you have a clear idea, right? Information may be in the form of budget, forecast, enabling an enterprise to plan effectively for its future, or may include an assessment based on its past performance and results, right? So here we mainly it includes past data, past information, present, and also the future forecast as well, right? That is the nature of management accounting. Again, management accounting and financial accounting are generally the two key branches of accounting. Management accounting provides relevant and useful information to people inside the business, such as employee, management, owners. In this case, actually, owners mean inside the business, right? Owners, auditors, like that. It provides information for decision makings and company strategy. Company strategy. Branch of management accounting, right? Then actually management accounting includes this cost accounting as well. Cost accounting is a branch of management accounting and involves the application of various techniques to monitor and control cost, right? Main purpose of the cost accounting is to monitor and that means ascertainment of cost and monitor and control the cost. Its application is more suited to manufacturing concerns, right? So this is regarding the cost accounting. Another important concept in accounting is costing. Cost accounting and costing. Now two different concepts, right? Costing, as per the
Excuse
CIMA,
me, sir.
that charter is, yeah.
Sir, your voice is not audible clearly.
Yes, sir,
Sometimes,
not continuous flow, interrupting. I think within 20 minutes, sir.
Just you have to mention, right? I don't know whether you can hear well or not, right? If it is not clear, just without wasting much time, you have to say. Now, can you hear me well?
now
Is
Sir,
it
now
clear
clear,
now?
but yes.
Is it clear than the previous?
yes, sir. But sometimes
Ah,
not clearly audible.
Sir, we thought that our internet connections some disturbance. That's why I didn't say.
I think you all cannot hear, no? That means it may be my fault, I think.
Yes, sir. Everyone says.
Yeah. It's a common one. You all cannot hear well.
Yes, sir.
Yes, sir.
Yes,
Yes, sir.
Now is it okay?
Okay, sir.
Now it's okay, but sometimes not
yes, sir. I
clearly.
think sir, it has been started from the stakeholders. I think stakeholders.
Right. Actually, if I brief it, a stakeholder, we can divide into internal and external stakeholders, right? That means interested parties, right? Interested parties or stakeholders or users of financial statement, we can divide into two. The internal mean then the management and the employees, right? In that particular organization. Then all others are investors, prospective investors, then the government organizations, then the economists, all under the external parties, right? Then if you think about the owners, also under the external parties. But if you think about the single ownerships organization, that is called proprietorship, right? Then only at that time, if the management, that means owners involved with the management, so that is under the then they are under the internal parties because of they are working as management, not for working as only on ownerships, right? Ownerships is not much important for determining the internal or external parties, right? Then if they are involved in with the management, they are under the internal management, that is under the internal parties, right? I think you got this point clearly. Is it clear now?
Yes, sir.
Yes, sir.
Right. Now, next task we discuss different concept under the accounting, that means different component under the accounting. We discuss financial accounting, then the management accounting, that is for that is only for internal parties, right? We are then we discuss about the cost accounting, right? They are under the cost accounting. We are monitoring and controlling cost, right? Ascertaining, monitoring and controlling cost. That is the main task under the cost accounting. But here another description here, costing, right? Costing and cost accounting. Again, cost accounting, you know that cost accounting is a formal system of accounting for cost in books of accounts by means of which cost of products and services are ascertained and controlled. That is the cost accounting. But Costing means it's a part of cost accounting. It's a part of cost accounting. The technique that processes of ascertaining cost, right? The technique and processes of ascertaining cost, right? That is under the costing. That is under the costing, right? Again, you can see some description relating to the cost accounting. Cost accounting is not restricted. If you are not having not hearing well, so please disturb me and send the message, right? Then cost accounting is not restricted to the past, right? Cost accounting, it is concerned with the ascertainment of past, present and expected future cost of products or services. Actually, cost accounting is a part of management accounting. Therefore, cost accounting as well as the management accounting concern not only the past accounting or the past information, they are concerning about the past, present and future forecast as well. But financial accounting mainly focus on past information, right? Past information. Later on we can discuss how to segregate this financial accounting, cost accounting and management accounting. Later on we can discuss, right? But as the very first day, I want to highlight the scope of this particular subjects or the areas, right? Here objective and function of cost accounting, right? Cost accounting. Now if I move to the cost accounting part, right, what is the main function? Ascertainment of cost, right? That is the computation of cost. Control of cost. So how to control cost, budgeting, budgetary control and so on. Guide to business policy, right? So here then prepare some guidelines for business. Then the determination of selling price. So ultimately we can go for the selling price as well. So pricing decision, right? Pricing decisions. Those are the key areas, key objectives of cost accounting or management accounting. Here, management accounting. Here further we have to say cost accounting is a part of management accounting, right? Management accounting relates to the provision of appropriate information for decision making, planning, control, and performance evaluation, right? Management accounting relates to the provision of appropriate information for decision making, planning, control, and performance evaluation, right? It's a broader a structure of functions than cost accounting. That's why I told that cost accounting is a part of management accounting, but cost accounting includes only ascertainment of cost and monitoring and control of cost. But here in this management accounting, it has more than that, right? So here you can see a decision making, provide provision of appropriate information for decision making, planning, controlling, and performance evaluation as well. So under the cost accounting, just mention only the planning and controlling part only, right? Then another definitions obtained from CIMA organization. CIMA mean, you know, that Chartered Institute of Management Accountant. Then you can see the presentation of account information in such a way as to assist management in the creation of policy and in the day-to-day operations of an undertaking. That is the definition of management accounting. Here, then we need to know the scope of that particular course unit. Now, as mentioned earlier, cost accounting, CA mean cost accounting. Cost accounting is a part of the management accounting. Management accountant should look at their organizational through managers' eyes, right? Manager size, right? So managerial aspect of cost accounting. Management accounting relates to the provisions of appropriate information for decision making, planning, controlling, as mentioned previously, right? Right. Then essential part of management accounting, ascertainment of cost, that means cost determination, cost control, performance evaluation, supply information for planning and decision making. So all under the management accounting. That is a broader concept than the cost accounting concept, right? Yeah, another accounting classification or category is the governmental accounting or government accounting, public accounting, right? Or federal or the governmental accounting, right? So then you know that internal government accounting as well. Government accounting ensure the financial position and the performance of the public sector institutions are set in the budgetary context, since financial constraints are often a major concern of many governments, right? So another one, tax accounting, forensic accounting. There are a number of, you know, that forensic and investigative accounting, right? Under the forensic accounting, forensic accounting is the use of accounting, auditing, and investigative technique in case of litigation or the disputes, right? So in order to identify the frauds and corruptions, financial frauds and corruptions, so we are having this particular area of forensic accounting, right? Auditing and forensic accounting. Forensic accountant act as expert witness in court of law in civil and criminal disputes that require an assessment of financial effect of loss or detection of financial frauds, right? I think it is enough to have just a simple idea of this forensic accounting and what is the role of forensic accountant as well, right? Then project accounting, social accounting. I'm not going to discuss everything, right? So then those are the concepts I want to highlight here. Then next one is the finance. Now we previously discussed accounting, then the financial accounting, cost accounting, management accounting, public accounting, and so on. Right now we move to the in addition to the accounting part in your syllabus, you have accounting and finance for managers, right? Accounting and finance for, yeah, that means accounting for financial for professional, that means health professionals. Accounting and finance for health professional or the managers, right? Then what is the financial part? Now we are going to start the discussion on financial or finance or financial management. So what is that? Then finance is a broader concept, right? Finance is a broader term that describe activities associated with banking, capital market, money, and investment. Basically, finance represent money management and the process of acquiring needed funds. Right? Actually, under the finance, mainly focus on the way of acquiring funds and also the way of investing them in different investment opportunities. That is the main task and the finance. But if you go to the finance there, in terms of finance, so you can see some sub activities as well. Finance is a, can you hear me well, doctors?
Yes, sir.
Right. Finance is a term for matters regarding the management, creation, and the study of money and investment. Finance can be broadly divided into different categories: public finance, corporate finance, personal finance, behavioral finance, and so on, right? Then behavioral finance, which seeks to identify the cognitive uh, reasons behind the financial decision. So that the behavioral finance, right? Then emotional, social, psychological factors behind the decision, financial decision making. Those are investigated or studied under the behavioral finance. Public finance, corporate finance, personal finance, you know that, right? Then what is the purpose of learning this kind of finance course unit or subjects? The purpose of finance so in order to finance it. Financing. Sorry? Can you hear me well?
Now interrupted, sir.
Sir, again interrupted.
I think there may be some connection failure. Yes. What to do now? Right. Now can you hear me well?
Yes, sir.
Can you hear me well?
Okay.
Right. Then again, if you have any interruption, then you can say. The purpose of finance is to help people save, manage, and raise money. Right. Then that is the acquiring funds. Right. Then the next one is finance. Finance is the function in a business responsible for acquiring funds for the firm, managing funds within the firm, and planning for the expenditure of funds on various
Sir, again happened.
under the finance. We focus on how to finance and how to invest, right? Financial yes, financial management. Financial management is the job of managing a firm's resources so it can meet its goals and objectives, right? Its limits to the limits to achieve goals and objective of firms. Most of the organization will designate a manager uh, in charge of financial operations, generally says CFO. CFO. What is that? CFO? CFO? Yeah. CFO. Corporate. Then CEO. Who the CEO? CEO. CEO. Chief.
Chief
Chief
Executive.
Financial Officer.
Chief Executive Officer. Now Chief Financial, right? Financial management could also be put in the hands of the company treasurer or vice president of the finance, right? Actually, that is depend on the structure of the organization and the scale of the organization. In large scale organization, we have president, vice president of finance, chief accountant, and the deputy accountant, or the finance, likewise, or the director finance, director, deputy finance, likewise. Then you can see different classification in this particular area. So you can see different organization structure. One organization structure under this one, enterprise financial manager. So under them, tax accounting or tax accounting, financial accountant, managerial or the management accountant. Under them, then we can see different other functional areas as well, right? Then finance was financial management. Finance is one of the crucial prerequisites to start any business. Further, sufficient scopus of funds, right? Funds and company is sold or wound up. Therefore, funds need to be managed, regulated as per procedures and its finances better experiences exponential growth and business that mismanage their financial resources and activities usually undergo losses or make lower profit, right? So here if you are managing financial that mean finance that mean acquiring finance or the invest in finance in proper aspects, so then we can expect the higher profit. Otherwise we can see the lower profit, right? So likewise, then here one number of descriptions relating to the process process and the event under the financial management. Financial management is the business functions that deals with the investing the available financial resources in a way that greater business success and return on investment is achieved, right? Then financial management professionals plan, organize, and control all transaction in the business. They focus on sourcing the capital entrepreneur, debt financing, venture funding, public issues, or any other sources. That is the fund sources, right? Fund requirement or fund acquiring sources. Financial management professionals are stability and growth for the right. So purpose then again interrupting.
Yes, sir.
Yes, sir.
Again interrupting.
Yes,
Yes,
sir.
sir.
Yeah.
Yes.
Can you see? Yeah. I think there is a issue in this my connection. So then I think if it is not clear, I think my that been closing date of my connection is will be tomorrow. That's the reason for later date, I think, right? Then I go for the went for the my phone, right? Again I have the same issue. What's the yes, what to do now? So otherwise I can stop now, right? Now we almost completed 2 hours time, so another 2 hours I can get from other days. Is it okay? If it is not clear, actually no, yeah, it is not useful for continuing the discussion now? What is the decision? Doctors,
Okay, sir. It's okay, sir.
right?
Okay.
Right? Then this point, then please read this number of slides here. So next time, so I will start from this point onward. Right? Then we have 2 additional hours. We will use them in future. Is it okay?
Okay, sir.
Yes, sir.
Okay, sir.
Will use this time, right? I will use this time within next planned process. Okay, thank you for active participation.
Thank you, sir.
Right.
you, sir.
Okay.
Thank you, sir.
Thank you,
Thank you,
sir.
sir.
Thank you,
Okay.
sir.